Hello guys, today we will learn about finance and accounting. What is finance and accounting? Contents: the need for capital, source of funds, budgeting and monitoring, sales and order intake, costing, pricing, annual statements, capital and its maintenance, auditing. What is finance and accounting? Any organization cannot be successful unless its finances are soundly managed. In this chapter, those aspects of finance and accounting with which the newly graduated software engineer is most likely to come into contact are emphasized. The need for capital. It is not uncommon for recent graduates in computing to start their own company that provides software services. Number 1, contract hire service. Number 2, develop packages. They will be in need of some money to start the venture. Capital will be needed for salaries, rents and bills, equipment, cost of advertising, miscellaneous expenses, interest on any money borrowed. Next, the need for capital. Present a business plan to potential founder. This plan should include description of what the company will be doing together with information to show that it is technically feasible and founders of the company have the necessary expertise. Number 2, assessment of the size of market and competition. Number 3, prediction of financial performance of the company. Next is source of funds. Source of funds. There are three types of source of funds: grant, loan, sale of equity. A grant. What is grant? A grant is a sum of money given to the company. Company is obliged to demonstrate that it has been used for the purposes for which it was intended. Grant is never paid back to the organization who gave it. Loan. What is loan? A loan is a sum of money lent to the company. Interest is payable on it at a rate that may be fixed or variable. Loan is usually for a fixed period. The company is liable to pay back the loan, and if company dissolves, the lender is entitled to recover the loan from the sale of company assets. Equity capital is money paid to the company in exchange for a share in the ownership of company. Next, what is budgeting and monitoring? A budget is a financial plan for a defined period of time, usually a year. It is an estimation of revenue and expenses over a specified future period of time. It is compiled and re-evaluated on a periodic basis. Budgets can be made for a person, a family, a group of people, a business, a government, a country, a multinational organization, or just about anything else that makes and spend money. A budget is a prediction of the future financial position of an organization covering usually the current or the next financial year. A complete budget includes prediction for all of the annual financial statements, but the most concerned aspect of budgeting is income and expenditure budget. Budgeting is an iterative process. First version of the budget is likely to show expenditure exceeding income. Adjustments are made repeatedly until a situation is reached where sales exceed expenditure with a reasonable profit margin. Budget is mostly used as a basis for monitoring the organization's performance. The figures in the budget are split into monthly or weekly figures. When the actual figures of a month become available, they are compared with the budget figures. If real expenditure of any field exceeds the budgeted value, reason is determined quickly and remedial action is taken.